Hello friends, welcome to the JM Corporate Bond Fund Technical Analysis. So the bonds were firstly launched on 24th Feb 2022 and the closing date is around 7th March 2022. The allotment date for the NFOs would be around 14th March 2022 and the minimum investment price is around rupees 5,000 if you are interested in purchasing these bonds. Now, moving forward with the company description of JM Finance Mutual Fund. So JM Financial is an integrated and diversified financial service group. The group primarily business include a investment banking, which caters to corporate, government, and ultra high net worth client, including investment banking, institute equity and research, private equity fund, fixed income, and syndicate and finance. Now, their other business include mortgage lending including both wholesale mortgage lending and retail mortgage lending, and they also provide alternative and distressed credit, including the assets reconstruction business and alternative credit funds. They are also an asset management and wealth management service provider. And now moving forward with the type of scheme that they are offering with their bond new NFOs. So the new release NFOs are an open-ended debt scheme, predominantly investing in AA plus and above rated corporate bonds. So you can see the risk is between moderate if you wish to invest in this. So what are AA credit rating? So AA credit rating as per CRISIL rating is, so it includes investments with this rating are considered to have high degree of safety regarding timely servicing and financial obligation. Such instruments carry very low credit risk. So the risk is relatively low compared to other securities as compared to A and triple B or double B. So it's at much safer side compared to those, but still the risk is around moderate. So like who should invest in this NFOs? So this product is suitable for investors who want to earn income over a short to medium term, or who wish to generate income or capital through investment in AA plus and above rated corporate bonds. But investors should consult their financial advisor if they have any doubt whether the product is suitable for them. Now, talking about the category of the scheme is corporate bond fund. The minimum application amount is rupees 5,000 per plan or option, and in afterwards you can therefore purchase additional bond with rupees 1,000 and in multiple of any amount thereafter, and there is no upper limit for the investment. Now, talking who the fund managers are. So the primary fund manager is Mr. Vikas Agarwal, and the secondary fund manager is Ms. Shalini, and the exit load is nil. So now talking about the benchmark. So the benchmark is as per CRISIL Corporate Bond Fund Index, and the minimum redemption amount. So there is no minimum and maximum limit on the amount which can be redeemed. The investor are free to redeem any or all unit outstanding in his or her portfolio. Now, the tax benefit will be received under the section of 112 of the IT Act. Now, talking about the assets allocation pattern of the scheme. So under normal circumstances, the investment pattern of the scheme will be as followed. So they will invest around 90 to 100% in debt and money market instruments. So the risk for them is low to medium, and they also wish to invest like up to 10% into retail and investment trust. So the scheme shall be exposed to corporate bond with AA plus rating or equal rating or above, and will have at least 80% of corpus of scheme. So this would help minimize the risk in the future. So the investment strategy. So the scheme aim to generate income by primarily investing in AA plus and above rating bonds. So the scheme shall endeavor to develop a well diversified portfolio of debt, debt and other instrument. The scheme may also invest in the schemes of mutual fund. The scheme may also be invest in hybrid security, which is retail trust and investment trust for diversification of subject to necessarily stipulation of SEBI from time to time. Though every endeavor will not be made to achieve the objective of the scheme, the sponsors do not guarantee that the investment objective of the scheme will be achieved. So there are certain risk criteria that has to be considered. Now, talking about the pros of investing in this fund. So the risk of pandemic hampering the growth of the company has reduced, and the new credit cycle upside is seen in corporate borrowing with the growth in renewable and consumption in country, and government is pushing corporates for capital investment in the company, and the new real estate upcycle is ongoing in the country, especially in housing market, which might lead to increase in corporate borrowing. There is low interest which support housing market, which in turn will reduce credit risk. Thank you. That's all from me.